You are being lied to right now. That's right. If you're a home buyer or real estate investor here in 2021, you are being lied to by realtors, local owners, and the mainstream media. All three of them together are perpetuating a massive lie about the housing market here in 2021 that's meant to scare you as a home buyer and real estate investor and basically push you into making a bad decision and buying at the peak price in volatile markets. What I'm going to do in this video is expose this lie. Expose this really awful lie, and I'm going to use data to do it so you can understand if you're a home buyer or investor, particularly in the South in the US, in the Sun Belt. This is where this lie gets told the most. I'm going to show you the data that you need to know so you don't end up making a mistake, making the worst financial decision of your life, buying at a peak price in a market that's destined to have a housing crash. All right, everyone, let's get into the data. So in order to understand what this lie is, we need to understand a very basic thing about America, and that's where people are moving. Where are people migrating to? And that's what we're looking at on this map. State by state, we're showing the states with the highest levels of inward migration. Those are in yellow. And the states with the lowest levels are actually the biggest exodus of people. Those are the states in red. And this is domestic migration data, the amount of people moving in minus the amount of people moving out in each state over a 5-year window, and it's tracked by the US Census Bureau every year. And I think the first thing that sticks out to you guys is the huge geographic disparity in movement and migration around America. I mean, in red, two things stick out like sore thumbs. New York State has lost 1 million people due to domestic migration over this 5-year period, meaning that 1 million more people moved out than moved in domestically. That's a 5.7% decline in population over this 5-year period due to domestic migration. If we zoom on over to California, we can even see a bigger nominal loss. 1.6 million people domestically have moved out of California in this 5-year period, a 5.1% decline in population. Some other areas with losses include Massachusetts, New Jersey, Connecticut, Michigan, and Illinois. Basically, the Northeast and the Midwest Rust Belt, along with California, are hemorrhaging people, and those people are going to the areas in yellow. They're going to places like Arizona, who had an inward growth of 312,000, Nevada, inward growth of 227,000, Oregon and Washington also have really high growth, as does Colorado and Texas. So the Southwest, Mountain, and West Coast are really benefiting from this outward migration, as well as the Southeast. We can see Florida has the most inward migration of any state at plus 600,000, a 4.6% growth in population, whereas places like Georgia, North Carolina, and Tennessee are also benefiting. So in order to understand what this lie is, understand and memorize what you're seeing on this map about where people are moving in America, because this has a big impact on the local housing market for where you're looking to buy either your house or your investment property. And I think that map probably makes a lot of intuitive sense to any of you who've been paying attention to the news, right? Or listening to what people in real estate have to say. It's no secret that New York and California have been losing a lot of people as of late, and that places like Florida, Texas, and Arizona have been gaining a lot of people. And that's clearly to the benefit of these Sun Belt areas for the local real estate markets. I mean, if you're getting a lot more inward domestic migration, a lot more people moving in than moving out, that's going to create demand for housing and potentially cause increases in rents and home prices due to that increased demand for housing. However, I have to actually confess something to you guys. I misled you a little bit on that map. I said that that migration data was over a 5-year period, which it was, but I didn't specify which 5-year period it was. I suspect most of you probably thought maybe it was the last 5 years, 2016 to 2020. In fact, it wasn't. That migration data actually tracked the 5-year period from 1991 to 1996. That's right, 1991 to 1996 migration. New York lost 1 million people to domestic migration. California lost 1.6 million. Illinois lost 300,000. These people moved by and large to the Southeast and the Southwest. And so why am I focusing on 1991 to 1996? You might be saying, well, that's not relevant. That's almost 30 years ago. Why do I care about that if I'm a home buyer or real estate investor today in 2021? The reason you care is because these migration trends that you might have thought are new and only applicable to the last couple of years, they've actually been the migration trends that America has seen for the last 3 decades. That's right, for the last 3 decades, people have been moving out of New York and California and Illinois and moving into Florida, South Carolina, Georgia, Tennessee, Texas, and Nevada. And it's important you understand this because this is where we're going to start to get into the lie that's being told in the housing market in 2021. This lie centers around misleading people into thinking that migration levels and growth in the Sun Belt in the South are somehow higher today than they've ever been, and that supposed higher growth is somehow a justification for the current crazy real estate markets we're seeing here. And as always, it's important to just establish context. What does this migration look like over time so you can really get a sense of how many people are moving into the South, how many people are leaving the Northeast over time? And that's what we're looking at on this graph. We're looking at 3 lines. The yellow line is the South, the blue line is the West Coast, the orange line is the Midwest, and the green line is the Northeast. These are the regions as designated by the US Census, and we're looking at the domestic migration into these regions in America over the last 30 years, year by year. And what do you see? I mean, you see that at the top, the South is dominant. I mean, the South routinely gets 300,000 to 500,000 net people moving in domestically every single year. No other part of America is even close to matching that. So it is objectively true that the South in the US is a growth machine. If you guys are enjoying the data in this video and you want to learn more about the housing market and whether now is the right time to buy or sell, then just hit the like button on this video. When you do that, it gets me more exposure and I can actually put out more of these videos going forward if you just hit that like button. Additionally, I want to hear you comment in the comment section. What are you seeing as a home buyer, real estate investor, or renter right now in the market? When you guys comment, it makes these videos better. All right, let's get back to it. However, what you can see is that those levels of growth and inward migration are remarkably consistent. They stay within this band of 300 to 500,000 each year, and they have a bit of a cyclical component in between. We can see that 92 to 94, we had a spike in migration into the South. It then went down around 2000, then spiked up again around 05, 06 at the peak of the last housing bubble. Then it went down again, and then it spiked up again over the last couple of years. But, you know, the 500,000 of net migration into the South that we saw in 2020, I mean, that's less than it was in 05, 06, 07, and pretty similar to what it was just a couple years ago. So the South, I want you to think of it as, yes, great growth magnet, but stable growth magnet. Going on the other end of the spectrum, you can see the Northeast, which is this green line. Lots and lots of people moving out of the Northeast every single year, minus 315,000 in 2020. But we can see that that's actually not as big a loss as the Northeast had in 04, 05, 06. Going back to the mid to late 90s, the Northeast lost a lot of people. So really the Northeast, you know, states like New York and Massachusetts and Connecticut and New Jersey, they've been hemorrhaging people for 3 decades. So the exodus that you're seeing from those places right now, today, in the pandemic COVID environment, that's nothing new. It's been happening for decades. And it's important to remember this data comes from the US Census Bureau. Every single year they estimate migration counts into counties, metros, and states across the US by using IRS tax filings and changes in Medicare enrollment. So this is some of the best data we have in terms of understanding where Americans are moving. And this data is showing stability in terms of the migration trends around the US. The primary driver of these migration patterns has been 2 things over the last 3 decades. One is weather, right? People don't like cold, they like warm, so they move more to the South. But the second thing is affordability. Historically, the South has been very affordable. Like you could leave your job in Chicago or Boston and go to a place like Austin or Atlanta or Nashville and feel like, wow, I'm saving a lot of money. This was a high value proposition move in terms of affordability and how much money I'm saving. That was a big competitive advantage that the South had for a very, very long time. The problem is, though, over the last year or two, especially the cost of rent, the cost of homes in the Sun Belt has surged significantly. We're talking 20, 30, 40% increases in these things just over the last year. And that's really deteriorating the value proposition that the Sun Belt has offered migrants across America. And so you can get a sense of this by looking at this graph, which is comparing the yellow line year over year home price growth in Austin, Texas, against the blue line, which is the level of migration percentage, basically the migration level related to the population each year, also in Austin, Texas. So we can see in 2020, Austin's migration rate was 2.3% based on 54,000 people moving in net compared to a 2.3 million population. So Austin's population grew by 2.3% due to migration. However, its home price has gone up 42% year over year in the same span. And that's really curious, right? Because if we look historically, we can see that Austin's migration rate has been pretty stable. It's been around that 2% range going back the last 25 years. And home prices, for the most part, track that level of migration. You can see this yellow line sticking pretty close to the blue line, right? Maybe going down a little bit during the last housing crash, up a little bit right after the last housing crash. But basically, home price growth in Austin, historically, very moderate, very stable, as well as those migration levels being stable until 2021, when home prices in Austin have gone up 42% year over year, even though the underlying levels of migration into the market are largely the same that they have always been. A similar situation is going on in Raleigh, North Carolina, where you can see once again home prices and migration percentage over time closely track each other. Once again, migration percentage is taking the amount of people moving in a given year and dividing it by the population. The home price growth is year over year increase in home prices, comes from Zillow. And yeah, we have basically stable historical levels of inward migration and home price growth up until 2021. Home prices in Raleigh have gone up 20% year over year through July. I think that number is going to be even higher going forward in August and September as we see more listings at high prices come to the market. Meanwhile, Raleigh's 1.5% migration rate in 2020, based on 21,000 people moving in on a population of 1.4 million, that migration rate is well within the historical band and actually well below what it was in the mid-2000s. So you got to ask yourself the question here, like, what is going on in places like Austin and Raleigh that were so historically stable in terms of both home price growth and migration? And migration is still stable, but yet home price growth is now up 20 to 40% year over year. What is going on? What's going on, in my opinion, is that we're in a speculative housing bubble in these markets. There's been some short-term dislocations in the supply of inventory on the market with the amount of people wanting to buy, and that's grossly skewed the local housing market upward by 20 or 40%. But that's not actually reflective of underlying changes and fundamentals in these markets. And just to get a sense of what I'm talking about, let's look at a couple other markets like Phoenix and Vegas, which have already gone through this type of surge above migration, so you can understand what might happen to a place like Austin or Raleigh going forward. So now we're looking at Phoenix. The yellow line is year-over-year home price growth from Zillow. The blue line is migration percentage from the US Census. And we can see that from 1997, 1996, all the way through 03, 04, Phoenix was pretty stable. The home prices didn't go up by too much. Migration was high, but also stable. But then in 05, 06, Phoenix had a big surge in home prices, 33% year over year, 23% year over year, very similar to the type of surge that Austin and Raleigh are having today, right? In a market that was historically stable, all of a sudden goes up by 30% year over year, even though migration doesn't even come close to justifying that. Of course, we all know what happened in Phoenix, a massive decline in home prices, over 50% decline over the next 5 years. And so this is kind of a flavor of what you could potentially expect to happen in a market like Austin or Raleigh. Ones like Houston and Dallas and Nashville might also be similar places that were historically stable. They got very expensive. Phoenix is a template there. Now, interestingly, Phoenix, it stabilized for a while, but now in 2021, it's up to 30% year-over-year price growth again. I think we all know, based on Phoenix's history, that 30% price growth year over year is not a sustainable level. Vegas is a similar story. You can see very volatile past. A past which initially was stable from 1997 to 03. Migration percentage and home price growth was largely the same. But then in 04, 05, we had a big surge in appreciation in Vegas, way above fundamentals. That then caused a big decline in prices way below fundamentals over the next 5 years. Vegas stabilized a little bit in recent years. We actually see home price growth was only 2.2% in 2020, but now it's vaulted back up to 22% in 2021, similar to the levels that it had in the mid-2000s. So I think we obviously have price downside in Vegas as well. And as Mark Twain said, something along the lines of history doesn't repeat itself, but it rhymes, right? When you have home prices all of a sudden vault way above the fundamental levels dictated by something like migration into the market, that is not sustainable. And that is what is perpetuating the big lie that realtors, speculators, and investors and owners across the Sun Belt are perpetrating right now. They're trying to say that these levels of price growth in a place like Austin, Raleigh, Phoenix, or Vegas are justified due to all the people moving there. They say that there's just so many people moving to these metro areas, and they insinuate or flat out say incorrectly that these levels of migration are higher than they've ever been. Of course, we know from the data on migration that we've looked at in this video that that's not true. Migration percentage in a place like Phoenix or Vegas is actually lower today than it used to be. And more broadly, the South is experiencing the same level of people moving there today that it did 10 years ago, 15 years ago, 25 years ago. And so it's really important that you understand this if you're a potential home buyer or real estate investor in these Sunbelt markets. That yes, they are high growth, but no, that growth is not really any higher than it's ever been before. Super important to understand that because the local realtors, the local owners, the local investors, they are going to try to hype you up, right? You might say to yourself, wait a minute, this doesn't feel right. Home prices up by 40% year over year in Austin? That doesn't make sense. But if a realtor were to tell you, oh, don't worry about it, we just have so many people moving in more than ever before, you might say to yourself, oh, okay, that makes sense. I don't need to worry about the crazy appreciation because there's just going to be an endless stream of people moving in more so than they've ever done before. Now, the one thing that we haven't touched upon yet, but is a very important piece to this puzzle, is the level of supply in new building, right? Because if, for instance, migration kind of stays the same, but the level of supply in new building goes down, then that could create a situation where there's a shortage in housing and prices go up. Even if migration is going up, maybe prices go up if we're not building enough. And I think it's a fair question to ask, especially given that the US in general is building less housing than it used to compared to 20 or 25 years ago. Less new housing is being built in America. So justifiably, there could be certain cities and certain areas and states that do have a real legitimate shortage of housing. However, there's a problem. And that's that the areas with the highest level of appreciation in the US are also the ones that build the most new homes. And you can see what I'm talking about in this graph where we're comparing two key variables. On the x-axis, it's the growth and permitting of new homes and apartments that's occurred in metros across the country. The growth basically from 2015 to 2017 compared to 2018 to 2020. Like how many more permits have been pulled the last 3 years compared to the previous 3 years. An indication of how much more housing supply is getting built. We're comparing that to home price growth over the last 3 years. And what I want you to pay attention to are these markets in yellow in the top right. Because these are markets where we have kind of this funny combination of huge appreciation with huge increases in the level of building. I mean, for instance, Boise, Idaho, permitting has gone up by 50% over the last 3 years. So a 50% increase in the amount of new homes and apartments being built, while values have gone up by 80%. In Austin, permitting has gone up by 47%, while values have gone up by 55%. And guys, I want to stop you. A 50% increase in permitting over 3 years, like that is massive. A massive increase in the supply of housing getting built. Other markets that are like this are Phoenix, Tucson, Salt Lake City, Colorado Springs, Provo, Utah, Ogden, Utah. These are the markets with crazy high price growth, crazy high permitting and supply growth. And basically, these are the ones where local realtors and investors and people with a financial interest in the housing market are incentivized to lie. They're incentivized to lie in these markets because intrinsically they know that this is not sustainable, that we can't keep having crazy appreciation and crazy high increases in building, that there's no actual shortage in these markets. So we need to tell people here that so many more people are moving in. It's the only way to sell and justify the story. Now, interestingly, the dots in the bottom left of this graph, places like Honolulu or Chicago or Des Moines, Iowa or Hartford, Connecticut, we actually have a decline in permitting over the last 3 years with lower levels of appreciation. So it's, I think, less likely that anyone in Hartford, a realtor, investor, or Chicago or Des Moines would feel the pressure to try to deceive a home buyer or investor because, like, it's no secret in these markets, like, we don't build much, not many people move here, we don't appreciate by much, we don't need to try to dupe you and pull the wool over your eyes to get you to buy in. So these markets in the bottom left, I actually think are probably safer investments right now because they've actually had a decline in building and they haven't appreciated by that much during the current bubble. And because real estate today in 2021 is still so behind the curve in terms of data, because the data just isn't readily available to most people to track, say something like migration, people can get away with lying, right? A realtor in Austin or Boise or Phoenix can get away with lying to you and telling you that the levels of growth are the highest they've been, that they're going to continue to get higher. They know that you're not going to go just be able to easily find, oh, what are the migration statistics into Phoenix? Right? So it's very easy for them to mislead. And in some ways, I think that real estate today in 2021 is very similar to how MLB baseball was in the late 90s, early 2000s. I'm sure a lot of you have read the book or seen the movie Moneyball by Michael Lewis, but basically talks how baseball 20 years ago transitioned from being this game that was run by old school scouts who basically made all the decisions about players and who to sign and who to trade. They made those decisions based on just like gut instinct, platitudes, conventional wisdom is how they made these decisions. And it's transitioned now into being something that's run by nerds. Sabermetrics, stats. Every team in baseball now, you can ask yourself the question, how valuable is this player? How much are they improving? You can actually quantify that. And I think real estate is entering a similar transition now in 2021. It's still really early on, but slowly but surely we are going to introduce data to the masses in real estate. So you will no longer have the wool pulled over your eyes. You're going to understand how much home prices have gone up in your city today compared to 5 or 10 years ago, and how that compares to migration or wage growth or job growth, so you can make a more educated decision. Because ultimately, these are the things which really determine the fundamental future of home prices. How many people are moving to an area? How much money are they making? How many homes are getting built? These are the things that truly matter, and they should be easily accessible to all of you out there, so you don't just have to rely on what some local person who has their own financial interest in seeing you buy no matter what. You don't have to rely on them. And so I hope you guys enjoyed this video. This is one of my biggest pet peeves, is how people try to mislead on how much the Sun Belt in America is growing. As we discovered, yes, it is growing a lot, but no, it is not growing more than it has ever been. There's a semi-cyclical nature to this growth. We had peaks in 94, 05, a peak over the last couple of years. We're probably going to see a slight decline in migration going forward in the Sun Belt. These are all great things to know if you're trying to make the decision, like, if I'm a home buyer, real estate investor, do I want to buy now at a 41 or 30% increase year over year price? Or do I want to maybe wait and see if that price kind of comes down to the levels dictated by the fundamentals? If you guys enjoy this data and want to see more of it, just become a subscriber to this channel if you haven't already. I come out with 3 of these data-driven videos per week. Additionally, think about joining the channel as a supporting member. The cost is $5 a month, and you get some very cool perks for that. You get exclusive access to a community board here on YouTube where I post graphs and data that only you can see as a channel member. I tease a lot of these videos before they come out on the community board. Additionally, I have a monthly newsletter and exclusive video that's only visible to channel members, where I break down all of the real estate data across America in this newsletter and video. So if you want access to those things, $5 a month, it's a great value. You can hit the join button down below. There's also a link in the description. All right, everyone, until next time, this is Nick from Reventure Consulting signing off.